Valentine's Day may be over, but the best part is yet to come, finishing off these stale conversation hearts. Chalky, plasticky sugar? Yes, please. Let's see what they say. Be mine. Well, that's pretty bottom of the barrel copy if you ask me, but hey, it's still sugar, so I'm not judging. Let's see the next one. I'm yours. If we can align on mutually beneficial acquisition terms and conditions. Okay, now that's more like it. Sweet, but realistic. Soulmate. InsurTech plus carriers forever. Or at least until we're all replaced by robots. Okay, last one. You rock. But you'd be even cooler if you followed Insurtube on LinkedIn. Well, that's a little forward, but okay. And now it's time for your Insure News. This is the time of year when Midwesterners stuck in the frozen tundra ask ourselves, why do we live here again? And if you're like me, that means you're aspirationally house hunting in Southern California, dreaming of palm trees and beach views. Hey, I said aspirationally house hunting. California, however, has a few insurance-related risk challenges that seem to be reaching a tipping point. For example, floods. After 3 years of drought, more than 3 weeks of biblical rain battered the Golden State from December 2022 to January 2023, causing deadly and costly floods and landslides from the Bay Area to Ventura County. The rains are headline news, but beneath the surface lies potential for an even deadlier and costlier disaster: earthquakes. Is California having an earthquake insurance affordability crisis? Most Californians live less than 30 miles from an active fault. Despite having 90% of the earthquakes, only about 7 to 10% of California residents have earthquake coverage. The biggest cause of the low adoption rate? Earthquake insurance is expensive, like worse than a Minnesota heating bill in January expensive. To reduce homeowner premiums, the California Earthquake Authority, CEA, recommends home earthquake retrofits to lower risk. But guess what? Retrofits are hella expensive too. People have turned to stuff like GoFundMe pages to pay for retrofits. And more than 1 million homes in California need earthquake retrofitting. One plus is that CEA is thought to be pretty stable, but reinsurance capacity is a looming issue, so maybe not as stable as hoped. Pending legislation addresses preparedness and mitigation, but doesn't directly address financial resilience. Clearly, underinsurance ain't just a West Coast thing. Ripples will be felt globally. According to Verisk, more than $5 trillion in property is at risk, and this figure could be dwarfed by resulting disruption and lost output from the 4th largest economy in the world. Is 2023 the year in which the earthquake coverage gap becomes a national issue? And does anyone have a Malibu beach house I can borrow? Just until the 8 feet of snow in my yard melts. So like July, please. Now let's hop over to our guest today. Ema Roloff is the Director of North American Property and Casualty Sales at EIS and host of Leading Change, an insurance podcast on digital transformation. Welcome, Ema.
Thank you for having me. I'm excited to be here.
Yeah, excited to have you on and get your thoughts. First up is Say What, where we share a quote from the industry to get your reaction. Today's quote is from Philip Morris, who said, "The trend I think is going to be big in 2023 is customer-centric innovation, the demand for hyper-personalized and real-time service." So Ema, do you agree that 2023 will bring a significant shift in customer-centric innovation? Is the insurance industry ready to meet the demands around hyperpersonalization and real-time service that Philip calls out?
I don't think we're fully there yet. And that's part of why this trend is something that we're continuing to see gain momentum and will likely see for more years to come. A lot of people will talk about customer centricity and customer expectations going beyond just our own industry. The way that the world has shifted and how things have changed, customer expectations aren't just shaped by other insurance carriers and what they're used to seeing within our pocket of the world. They're shaped by how customers engage with everything in their lives, which is why this customer centricity is so critical for every industry, not even just the insurance industry. But there's some things that we still need to do from a data perspective to really make those real-time interactions possible, to be able to do things like give people quotes the second that they're looking for them, or help address a claim or a concern that someone has in real time immediately. Those things require a different approach to how we manage data and how we manage our processes. But that takes time, especially in an industry like insurance that sometimes isn't always super well known for being speedy.
Insurance is definitely playing catch up when it comes to matching other industries' customer experience. How far off are we?
I think there are certain parts of the life cycle that we're getting closer to that. So you're seeing more and more digital experiences. And I think through conversations that I've had in the industry, we're also recognizing that options and providing customers with the ability to call and talk to someone or go online, and kind of this ability for the customer to choose their own adventure, so to speak, is something that I see a lot of carriers doing and getting much better at providing. I think where we still have room to improve when it comes to these real-time decisions and that interconnectedness to the data that's available in the world, when we start looking at these connected devices and homes and cars and all of this information coming at us, that's a very, dealing with big data is a new challenge for every industry, but it's also something that requires different systems and different process flows. And while the industry is adopting these things, we still have a lot of room on how we can use this data to really drive our decision making and drive our customer experience. And that infrastructure side of things and setting up those processes and kind of like core system transformation that needs to happen to enable that is where I think we have the biggest opportunity.
Lots of work on the core side to get up to speed, that's for sure. We talk about bells and whistles, but we have to meet the basic needs before we can exceed expectations. And that brings us to our last segment, Who's Your GOAT? Where you get the chance to share a bit about a leader in the industry who inspired you or in some way helped shape your career. So who is your greatest of all time, Emma?
I would say my GOAT is going to be Bryan Falchuk, going towards the insurance industry. And he's touched so many different parts of the insurance industry. He's been a really great friend and mentor for me to call and ask questions, talk through situations with. And then from the content perspective of doing this type of stuff, he's always down to experiment and try new things. So he was the first person in the insurance industry who was willing to join me in a TikTok and even buried himself in the snow to do so, to help talk about embedded insurance and really get the message across to people. So he's a lot of fun to work with, has a ton of knowledge and experience within the industry, and has been really willing to help, mentor me with that knowledge over the last couple of years as we've been friends.
Well, I'm all about the fun insurance content, obviously. So shout out to you and Bryan for taking on channels like TikTok that really help enable a different side of content like that. And thank you so much, Emma, for sharing a bit about your GOAT and your perspective on the evolution of customer-centric innovation. And thanks to everyone at home who took the time to tune in to today's episode. Follow Insurtube on LinkedIn and subscribe on YouTube to catch all the insurance news and conversation. We'll see you soon.